Let's also welcome on board then Jonathan Schiessl, Fund Manager at IIFL, to chat about what he's making of the market right now. And Jonathan, our markets definitely has gone in a bit of a pause mode thanks to the global markets holding up. Otherwise, given the economic headlines, I shudder to think what the market levels would have been.
Yeah, I think India has held up remarkably well considering the data and the pretty negative sentiment domestically. Obviously, foreign flows have helped, but yeah, we're obviously coming under a bit of pressure now.
Where within the pockets of the economy do you actually see stress, Jonathan? I mean, we've already seen a recovery play out when it comes to autos. Some of the manufacturers like Maruti, a very meager flash in the pan, but the production numbers for the month gone by were in that sense a little bit higher. But besides that, where is it that you see continued stress when it comes to the economy sectors?
Yeah, that's a difficult question because I guess with the data at the moment and with the pretty much across the board sort of negativity in most sectors, it's pretty much everywhere that you can spot stress if you're looking for it. I think the job at the moment is more to find the green shoots, which there are some seeming to be popping up here and there, but fairly limited. So at the moment, I think even the consumption side has been under pressure for some time. Autos, and now obviously spreading into some of the staples areas as well. So yeah, look, it's a lot of negativity around at the moment, but clearly stock markets are forward looking, and we would hope that this sort of time is the bottom.
And hi there, good afternoon. Let's get in a take as well as to what the sense is when it comes to the overall fund flow activity as well. We have seen FPIs that have slowed down. The recent data did indicate, domestically that SIP investments are continuing on a fairly steady terrain. But what's the sense that you're getting with the overall liquidity situation in light of all of the developments globally?
Yeah, look, I mean, globally, the dollar's come off a little bit recently. Emerging markets are trying to push higher. They had done quite well a few months back, come under a bit of pressure with this trade negotiations sort of dragging on forever. And more recently, they've sort of tried to make another pop up slightly higher. And I think that's accounted for, obviously, some of the flow that India's seen more recently. But there are a lot of risks out there at the moment, and this week is particularly quite packed full of potential banana skins as such. Clearly, we've got the Fed tonight, then we've got the UK election tomorrow, and then we've got the all-important potential trade deadline approaching on the 15th as well. Whether that gets pushed out or not, we just don't know. So there are risks out there, but when you look at developed stock markets like the US, the S&P, we're pretty much at all-time highs. So there is some confidence in equities at the moment because clearly, markets being so high, that's factoring in a fairly optimistic outlook. And that has obviously rubbed off to a degree on emerging markets as well. But I think emerging markets have lagged considerably for some time. And, I think the turn potentially could come, in the future if some of these headwinds ease off.
Yeah. Jonathan, what about India then? Where is it that you are finding pockets of opportunities to invest in? Banking, for instance, the pool is somewhat getting larger. You do see sporadic moves come in and not SBI, some of the other smaller PSU banks as well. What I intend in saying is that the list is expanding beyond the HDFC twins and, the Kotaks of the world.
Yeah, look, I mean, you just have to look at the chart of ICICI Bank. That chart's been incredibly strong. The stock has done very well, and a lot of the sell side guys are talking about considerable potential upside in the period ahead. So I think the corporate banks have done pretty well as well, and you mentioned obviously SBI there. The financial space, we're still very overweight, and still will retain that overweighting. There are pockets, obviously, of stress, and there is still a lot of uncertainty about some of the so-called less, not tier one NBFCs. So clearly there's some issues that still need to be resolved there. But banking and the financial stocks look good to us still. And then otherwise, you get the feel that the mid-cap space is becoming more interesting. We're certainly looking at the mid-cap space where you do see a little bit more value than certainly you find in some of the larger cap names that have led the market over the last couple of years.
All right, that's the view coming in. Just stay with us, Jonathan. I just want to take a look at the markets right now because you have seen that sizable recovery kick in. We're now above the 11,900 mark. The mid-cap index too is continuing to power through, and you are seeing a sharp rise coming into some individual sectors. Pull up the market breadth. I think that'll give us a clearer indicator as to how things have shaped up in the afternoon trade. While metals and MNC are taking a backseat, IT, PSC, energy as well as real estate are holding out. That market breadth continues to remain in favor though of the losing side. Kunal, just let's get in comments as to how you're looking at the kind of recovery that we've seen. Some of the names that are buzzing, I'm just flagging them off. There's GAIL, HDFC, AMC, Bajaj Holdings, DLF.
These individual stocks have started to crop up in terms of price performance. ONGC, I think exceptional price move intraday as well. Manappuram was doing exceptionally well, I think before I think a couple of hours back as well. So I think that's a very good recovery. And ICICI Bank coming back into those 530 plus levels, I think could also be one of the reasons why I believe that the Nifty's moved up into positive territory. But one of the data which I was highlighting in the morning as well, that how the put call ratio has gone into an extremely oversold territory. Generally, when that happens, Nifty doesn't stay on the lower end of the price curve for much long. There is bound to be some sort of a short covering, even though it's short lived. But I still believe that it's because of the oversold nature of many of the indicators that you're seeing such a ferocious bounce.
Okay, that's the view coming in. Oversold indicators are now leading to this kind of a move on the markets. Let's pull up some of the other movers then. And from the large caps, take a look at ONGC. That stock has seen a sharp spike in trade, now 2.5% higher from the frontliners. There's Z Entertainment, GAIL, as well as NTPC. Siemens, Piramal Enterprises as well is currently active in today's trading session. Just some of the other prominent Nifty performers that I just want to flag off at the current juncture. You've got Tech Mahindra, TCS, Asian Paints, as well as Eicher Motors and Tata Motors that are active. Dr. Narayan, let's get in your views as to how you're seeing that mild recovery that's led us to 11,900 and how the mid caps too are showing quite a bit of fervor. Tommy, your view?
Hello? Are you able to hear me? The kind of briskness that you're seeing.
I'll skip that. Jonathan, I just wanted to get in your views then. Just come in on what the outlook is right now in terms of where it is that you're advising, one should be allocating money at this point in time, because while we have seen markets perched at record highs, one can't ignore the underlying fact that the macros are seeing a disconnect, that the earnings growth hasn't quite picked up, and there's only those select names as well that are seeing a concentration.
I mean, that's been the case for some time, hasn't it? That the concentration in 4 or 5 names, which has held this market up and pushed it higher. So I think clearly the more domestically focused names are the areas which have come under pressure. The auto sector, as you mentioned earlier, has seen some reasonable bounce. Have things sort of cleared up, and are things going to get better from here? That remains to be seen. Demand obviously still is an issue. So I'm not sure the worst is through there yet, but that's certainly a sector where value was certainly appearing for a long-term investor. I think the industrial space is also an interesting one. I mean, the likes of L&T have come under a fair amount of pressure more recently, concerns over state government budgets, and obviously them meeting their order book targets for the rest of the year. So that's some of those industrials, more domestically focused stocks. You could certainly argue there is value, and the point is, I think when you've seen, yes, there has been some disappointment from the RBI not cutting last week, but the reality is, we have seen action from both government and the central bank, And we would hope that, ultimately the data will start to push higher over the next couple of quarters. It's not going to be a very V-shaped recovery, but more of a U-shaped recovery. But and that when things get better, some of the more domestic cyclicals will probably start to outperform, and then the sheer amount of weight and money that's been hiding in these large names that have held up the market over the last couple of years will probably start to shift, but probably not just yet.
I just want to bring up the Nifty again because you're seeing a very sharp recovery come in. My colleague Ruchi Bhatia just reported, remember today evening is the cabinet meeting, and the cabinet was to mull some benefits to the housing finance companies as well as NBFCs. And she just joined us a short while back, and she was highlighting that the cabinet is going to allow IIFCL to fund all infrastructure projects, and that comes in as a big relief for NBFCs as well as HFCs as well. Ruchi Bhatia, my colleague, was just highlighting that. And one can see the market react to that because to begin with, it was the infrastructure, real estate bottleneck really, which is why you saw this fair amount of pressure with rules like RERA implementation. Before that, you had demonetization, then the GST implementation, and all of them had sort of acted as a logjam when it came to the sector. And now you're seeing a big relief. It seems it's in the works. We're going to still wait by for the cabinet decision and the final outcome. But it seems that some relief for NBFCs and HFCs could very well be in the works. The market getting excited just at the hint of it. 11,950 almost back. And the breadth as well has seen a very, very sharp recovery come by. Jonathan, the other big a theme in the market has been disinvestment, and we understand that the BPCL roadshow is going to begin this month itself. Do you think a lot will hinge on the success of the BPCL divestment, how complicated the process turns out to be for a further rally in some of these PSU candidates?
Yeah, absolutely. I mean, the issue has been we've heard divestment talk many times in the past, and then there's just been a lack of follow through. I think a lot of foreign investors in particular are concerned about the fiscal deficit, and what we're certainly telling clients is that we do believe this time around the government is serious about divestment. But clearly the BPCL will be a test case. There are some hurdles that need to be overcome. It's quite a complicated process, and I imagine that's not going to be easy. But we do think the government has to go down that path if it doesn't really want to blow out the fiscal deficit. So I think the incentive for government to actually push this through is very high. So yes, we would certainly think that the BPCL event will be the sort of litmus test of the entire divestment process.
That you're making of the entire telecom story, Jonathan, because on a public platform, the Idea Vodafone promoter Kumar Banglam Birla was, heard saying that they'll have to shut shop if the government doesn't really give them any sort of AGR relief. That aside, if it were to really come to such a stage, the kind of snowball effect it would have on the banking system per se.
Yeah, I mean, I think we sort of reached a point where things had to change, tariffs had to, move higher, and again, government needs to be taking a more nuanced approach towards that sector. So clearly, stocks have rallied very hard on the initial moves. Yes, tariffs have been pushed higher, but yes, more needs to come, and I think it's a sector which will remain in focus for some time. But clearly, India needs 3-4 decent players in the market. It's a huge market. And if the Vodafone idea were to drop out, that would clearly be a very negative situation for competition in the country. So the regulator, does need 3, even 4 reasonably strong players, and therefore, we expect to see continuing action in that space as well.
All right, that's the view coming in on telecom. But in the meantime, what about the valuation, discomfort, if you will, when it comes to some of the FMCG companies? While that has been narrowing, don't you think that a substantial earnings growth is required in order to justify the same?
Yeah, look, I mean, we've been struggling with some of the particularly the staple stocks valuations for a long time, if I'm honest. And some of the stocks have come down a little way, but when you're looking at consumer staple stocks trading at the valuations they do, and expensive. And clearly with the slowdown we're seeing in rural areas, there has been some hit, and we've seen that in the numbers as well. Yet the stocks still, yes, they've come off a little bit, but they're still trading at historical, very high, historical valuation points. I'm not sure we'll see those valuations collapsing anytime soon, because clearly there is a premiumization story in that whole area, and rising penetration, etc., etc. So, in all likelihood, the valuation premiums might come off a little bit more, but we would still expect them to, that whole area to remain a fairly expensive area vis-a-vis other sectors in the market.
But how would you approach, the concentration that we've spoken about earlier in our conversation? How would you look at the other space, which is looking very cheap, where growth prospects is not high? So maybe some of the large mid-cap names, or so-called mid to large cap names. Is that something which you would look at?
Yeah, absolutely. I think again, stock markets and investors should generally, a market like India with some of the volatility we experience, history would tell you being a long-term investor is the best way to play this market. Sure, if you can play short-term, that's up to the individual investor, but long-term investing, this market's very good for that. And therefore, you've got to look through the pain that some of these mid caps and other stocks not in that concentrated part of the market. There are really interesting stocks there with really good businesses that have great long-term and medium-term prospects, and so you've got to look through the pain we're going through at the moment, because we will come out of this phase, and therefore those stocks do look quite attractively valued.
Thanks so much then for joining in, Jonathan, sharing with us your outlook on the markets as well as where you're finding pockets of opportunity. And as the recovery has kicked in, we're now at a